Hey guys, Tony DeNaro here. Welcome back to the channel. Monday, September 26th, and we've got an important new SEC filing from AMC, a new 8K dated today, September 26th. Let's get right into it. I hope you all had a great weekend. We sure did here. Let's talk about this 8K filing. You can find this form on the SEC website or on AMC's investor relations page. I'm going to go through a couple of highlights of the document with you and talk about what this might mean for your investment in AMC. There was this one very interesting headline that came across the wire on Friday, September 23rd. I don't have a subscription to Bloomberg Law. This is a separate paywall. But there's some interesting things in what we can see here. AMC is looking to refinance some of its $5 billion in debt as the company looks to buy itself more time and potentially lower its interest cost. The second paragraph, though, is even more interesting to me. The company tapped Citigroup to gauge interest in new debt to repay some or all of the roughly $500 million in foreign currency denominated debt that its subsidiary Odeon Cinemas Group owes, according to people with knowledge in the plan. Right now, the dollar is very strong against foreign currencies, and this could be a great time to strike and refinance or pay off some of that foreign currency denominated debt. Now that we have that as a foundation, let's go back to the 8K. Digging into some of the details and some of the highlights, we can see here that the date of this report is September 26th. It covers AMC and APE. And here in the first paragraph, they are reminding us that the APE units that were issued in August are a currency that can be used in the future, among other things, to further strengthen the balance sheet, including by paying down some of the debt and other liabilities. Recall that when AMC created the APE units back in August of 2022, they created 1 billion of them and distributed about 516 million to AMC shareholders in a special dividend. And that left Adam Aron and the board of AMC about 480 additional million APE units to use as potential future currency to pay off the debt. And in this 8K filing, the one filed today, September 26th, it states that this will allow the sale from time to time up to a maximum of 425 million APE units. This reflects the total number of APE units that are currently authorized minus a portion that are held back for executive equity awards or future equity incentive plans. The company is not obligated to sell any APE units under this distribution agreement and may at any time suspend solicitation and offers under this distribution agreement. And the final key point, the equity distribution agreement is with Citigroup Global Markets as the sales agent, and it allows AMC to control the timing, the amount, and the pricing of any future sales, subject to, among other things, market conditions and trading volumes. The company intends to use the proceeds from sales, if any, of the APE units to repay, refinance, redeem, or repurchase the company's existing debt and for any other general corporate purposes. There are pages and pages of other boilerplate standard information in this document, but there is one other paragraph here talking about the settlement of the shares. And I know there's been a lot of discussion, is APE T+0 or T+2. I'm pretty sure it's T+2 based on trade tickets that I have seen from investors with their trade date and their settlement date being 2 days later. And here we have one more little bit of a clue. Settlement for sales of the AMC preferred equity units will occur on the second business day following the date on which such sales are made. T+2. Can we just put this T+0 thing to bed? APE is not T+0, it is T+2. Now, when will you actually know if any APE units have been sold into the market, if any dilution occurred? For sure, we will know on the next 10Q. As it states here, the company will disclose on the annual reports, the Form 10K, and on the quarterly reports, the Form 10Qs, the number of units sold through Citigroup under this agreement, the net proceeds that the company received from such sale, and the compensation paid to Citigroup for managing this sale. In the filings made today, at the very last page of one of them, there is this chart which shows the registered amount, 425 million shares, the proposed maximum offering price of $3.58, netting a total of $1.5 billion in cash to AMC. So wrapping it all up in the too long didn't read format, what does this mean to you and how do I feel about it? I know you guys want to know that too. Paying off the debt and improving AMC's balance sheet is a good thing for the fundamentals of AMC. But I've made no secret of the fact that I was not going to be very happy if dilution was announced while APE was at a low price. And sitting in the low $3 range is, for me, a low price. Now, I know some of you are going to say, but Tony, it says they can sell the APE shares from time to time. This doesn't mean they're going to dilute right now. In my experience, guys, when a company puts a form out like this, stating their intention to do dilution, you can usually bet that that dilution is coming in fairly short order. Dilution, never a huge fan. Improving the fundamentals, paying off the debt, well, that I am a fan of. This money could also potentially be used to purchase some theaters from Cinegroup. Who knows if that is also in play. Obviously, we'll know more when the next 10Q quarterly report is filed, exactly how much dilution was done, or maybe the company will put out an announcement when the sale of the shares is done. I look forward to hearing more information from Adam Aron or from AMC. I wanted to get this out as quick as possible, so that is all I have for you on this quick update. Don't forget to buy and hold that subscribe button, and I will see you on the next video.
You think that I'm afraid